Okay, I want to do a video here in St. Kitts, but it's not about St. Kitts, it's on the Chinese market. The reason I wanted to do this is I did several videos a while back on the Hang Seng Index, and I was telling everybody back then that the Chinese market was very depressed. It was a lot of negativity. Everything you saw in the news was negative. Of course, that's a good sign to buy usually when that happens. Also, folks, if you want to go in that market, you need to be cautious because, of course, no equities are guaranteed. You can lose your money when you go in those markets or any markets in equities. But the Chinese market, you got currency risk and you also have the country risk. So you need to consider that. And also you have the risk of the ADRs being delisted if you get an ADR, or you can go actually in the Hong Kong market and avoid the ADRs and go directly on the Hang Seng, or actually the Hong Kong Stock Exchange. So this is one option you can do. But when I was telling people, we'll go back maybe a year ago, and then I went through other videos that were at the first of the year talking about the Hang Seng Index. And of course, the Hang Seng Index has Chinese stocks and it's got Hong Kong stocks too. Some of the stocks that are listed on the Hang Seng Index is listed, they're Chinese stocks. And one thing too is Chinese stocks have a 10% withholding tax, typically depending on the country you're from. If they're in Hong Kong, it's zero. Now, if you're a U.S. citizen, U.S. resident, you're taxed on your worldwide income, they won't withhold taxes on the Hong Kong stocks on that exchange, but you're still supposed to report those to whatever country you're in. If that country taxes worldwide income, U.S. taxes based on citizenship and residency, so you still have to report it. Now, if you're not in those countries, if you're a U.S. citizen, U.S. resident, and you relinquish your U.S. citizenship, then you can get around that totally as far as the dividends. And that would be something that you might want to check with us on, because that's what we specialize in. If you want to get your income taxes zero and also get a second passport as quick as 4 to 8 months. Now that index, the Hang Seng Index, is up just short of 40% year to date. It will probably come out of the year, unless there's a big change and it drops. It might be one of the highest in emerging markets, but I've told people before that the Hang Seng Index is very, very depressed still. I mean, although it's gone up just short of 40% year to date, that index has got, I feel like, a long ways to go. The valuations right now are about half what the S&P 500 index is. And the S&P 500 index right now is about the same valuation that India's stock market is. India is actually a little bit higher on their valuations. I checked as of Friday, and I noticed that Mark Mobius was talking about he likes India a lot. But I tell you something, the valuations, he thinks it's still going to be doing real well because of the growth of India. But those valuations, in my prediction of the next 10 years, I think China is going to outperform India because the valuations, and Chinese are so good at saving their money. They save about 40% of their disposable income, and it's eventually going to be the biggest stock market in the world. It will bypass the U.S., and I don't think it's going to be too far before that happens, or too long from now. But you're going to have zigzags along the way, so you're not going to have where the market's going to go straight up. So, and I don't give advice on equities to go into. You can get with your financial advisor or do your own research. One thing I will tell you is, I think you're better off not going with financial advisors. Most of them underperform the S&P 500 index anyway, and a lot of them just charge a lot of high commissions. You ought to be doing a lot of research, but you need to do a lot of research before you go there. And remember, that you can lose the principal of your money, and you can lose all of it depending on what equity you go into, but that's true in China or the US on equities, okay? Now, I went back and just looked. I went back to looked at the Hang Seng Index as far as even up just short of 40% when I checked it on Friday, year to date. The index actually is still where it was back in 2010. Now, the US market is going way up from 2010, but not the Hang Seng Index. And that goes to show you not only the valuation is lower, but it still has not, you're still looking at the same point it was in 2010. And I'll tell you something else too. You can go back to 2007, I think is the year it peaked out, and it still has not hit back up. It did bring it up to one point where it exceeded that, but then it went back down. It's still below what it was, where the Hang Seng Index was in 2007 when it peaked out there. Now the U.S. has gone up several times up from there, but the reason it has, it's gotten overpriced. The valuations are a lot higher in the U.S. now. And don't take it from me. Listen to Charlie Munger. He said that Chinese stocks before he died, not too long before he died, several months before he died, that the big Chinese companies are a lot better priced valuation-wise than the big U.S. companies. And you need to look on a world view when you're going and looking at equities, because if you're going strictly in one country, you're going to be sadly hit when that balloon busts. And I don't know how, they're talking about a recession next year in the U.S. I don't even look at that, but you need to consider it, because that's why you ought to be looking globally and picking places that where there's a lot of liquidity in the equities. That's the key. And you want to go in areas where there is a lot of potential. And China's got, over 1 billion people. It's got, 4 times the number of people the U.S. has got. They're spitting out more millionaires than the U.S. is doing. And true, you can bring up the stuff. It's, they don't have free elections, whatever you want to say. But the fact is, you don't have to have the market to go way up to have that. I remember what Chinese market did from 2007, man. It went through the roof. So, I mean, and actually before that too. But right now, you need to be looking at not just the equities themselves, but the U.S. The U.S. dollar has not had a major correction since about 2008. That's when it started to take its run. And usually it's about every 11 years that you have a bear market in the U.S. dollar. So we're way past the 11-year point. 2008 was the point when the U.S. dollar started to take off. And so this is what you need to be looking at, because it's not just the actual equity, but also the currency itself. Because when you have a turn on the dollar, you get the run up on the currency difference and also on the equity itself. Assuming that the currency goes up, it could also go down, okay? But the U.S. dollar still hasn't had that big major correction. And when that happens, that's usually when the emerging market really takes off. You could see some exponential growth for years. And I can't tell you what's going to happen in the future, but I can tell you this: if I had to take a bet on the U.S. market versus the Chinese market over the next 10 years, maybe even 15 years, I think the Chinese market will outperform the U.S. market over that time period, at least over 10 years. Could be wrong, but that's what I'm looking at right now. And if you look back at some of my old videos, I was telling people months and months ago, if you go in it, to dollar cost it, keep hitting those bottoms until it finally corrects. And then it just so happens, man, now it's just taking off. The brokers can't even keep up with the new applications of people trying to set up accounts in Hong Kong now. It's just booming. But remember, this is something I mentioned to you before. If you want to go in and get really good deals, you can't look at if you look at the news and listen to what the news says, you're gonna get it wrong all the time, because the more negative the news gets, remember, people buy and sell based on negativity and positive, and what they see is positive. So as long as everything is negative, you're always going to have more sellers than you got buyers. And that's what makes the market go up and down. It has nothing to do with valuation. It has to do with more people that are buying than selling for the market to go up. So it has nothing to do with anything else except that. So you've got to go against the grain, and when it gets really negative, that's when you got to go in. You don't know where the bottom's going to be. You dollar cost, and eventually when you get that turnaround, you get that big jump up. But John Templeton, one of the best investors that ever lived, he started the Templeton funds, and now it's Franklin Templeton Group. He sold out many years ago, and then he died. But one of the things that he mentioned that you ought to try to remember, and that is, if you're going and you're going to be buying, you want to buy at the maximum pessimisticity. If I could say anything, it's maximum pessimisticity, but go with big companies that have been beat up. And then what you do is, once you get a glimmer, but you got to do this before you get any glimmer of hope. Once the glimmer of hope, which is what we're getting now in the Chinese market, because hedge fund managers are jumping in left and right now. Some of them were already in, because a lot of them, the smart ones, were in early dollar costing, but now they're all jumping in. I say all of them. A bunch of them are in, going in now. That's what's going to fuel the market for a long time, because these guys are going to gradually start dribbling in that market. But the problem is, most people go in when it's too late, after it's gone way, 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 way up, and everything is positive. That's not the time to go in. You got to go in when everybody else is very, very negative. Once there's a glimmer of hope, you've already missed a huge amount of growth. Once that glimmer of hope comes out in the public, and that's what we're seeing right now. I'm not saying that right now is the end. We're at the very beginning of this bull market, but you've missed the huge run-up. The bottom, I think, was right around 14,000. I don't think that will ever get hit again. It could, but I think we're past that point where I don't see it ever hitting 14,000 again. And now it's, I think I checked the other, I think it's around 20,000. I'm not looking at it right now, right around 20,000. So we haven't quite doubled at that point. It's around 20, 23,000. I'm not looking at it right now on the Hang Seng Index. But year to date, it's up right around just under 40%. So, like I told you before, what you have to look at too is you go back and look at charts. I'm telling you some things that you ought to be looking at. You can do this checking yourself. Go to Google and pull up the Hang Seng Index. Just do a Google search, put Hang Seng Index chart. You can look at it. It got the dates and everything. You can pull it up, and you can see that 2010, at about the same, almost the same month, I think it was around September of 2010 roughly, it was selling for about what it is right now. Now, that doesn't include dividends, because dividends were paid out. It's not shown on that chart. So the rate of return and what you see is after those dividends were paid out, and the chart movements occur after the dividends are paid out. So the rate of return is actually better than what it shows on these charts. But the key thing you got to look at is how beat up that market is today. And I think if you go in and you dollar cost, don't try to pick points when you look at these charts. You're never going to pick the bottom, okay? You're just never going to do it. And if you miss it, it keeps going up and your dollar costing, no big deal. But I would not be going in putting large amounts of money in it, but do your own research carefully. And again, when you go in these markets, your money's not guaranteed. You've got different risk, currency risk, country risk. So these are things you need to take into consideration. And when you go in any type of equity, you can lose 100% of your money. And if you're not comfortable going in something like this and putting in money where if you lost it, wouldn't bother you financially, wouldn't lose any sleep over it, then make a move if you want to do that. But if you're the type of person that's worrying about everything dropping and it bothers you a lot, don't go in these markets, okay? Because you know, you want to sleep at night, and you don't want to be losing money that you need for your retirement. This is the key thing you want to look at. If you want to do us a big favor, you can hit the subscribe button on the right of your screen right here, and you get new videos automatically as they come out. And also give us a thumbs up if you like our videos. And also, if you can pass around these videos to your friends, it helps us a lot. If you do hit the subscribe and give us a thumbs up on the algorithm, and our videos will get to more people. We don't monetize this channel at all, so this can help us out a lot. And go to our website, www.citizenshipquickly.com, if you want to legally get your income taxes to zero, or how to get a second passport as quick as 4 to 8 months. And I've always said to everybody, I think St. Kitts is one of the best places in the world to get a second passport. More visa-free travel than any of the fast-track companies in countries in the Caribbean. And not just that, but there's no income tax, no capital gains tax, no estate tax, no inheritance tax. Beautiful weather all year round. It's incredible. You can see the ocean off in the background. I'm on the Marriott Golf Course. This is right on the edge of the ocean here, and best place in the world to live. One thing I really like about here too is the weather never gets cold here. I don't like cold weather. Now, if you like cold weather, you would not want to be here. It doesn't get really, really hot. It's not like Central America, but it does get, I'm in probably, September is probably the hottest month of the whole year here. And now we just hit October now, and the change of season is just getting ready to occur, but we only have about 5-degree difference here all year round. But you can get the passport quick, 4 to 8 months. They've gotten really strict though. So if you've got any sort of background issues, we do have other countries that we can get you in. But all the fast track programs in the Caribbean have gotten really, really strict now. So if you've got any sort of background issues, you might want to cross out. Although we'd have to look at it and see. But if it's significant, we'd have to pick you on another country, okay? But we have a country almost for everybody. It just depends on what you're looking for and what your background is. If you want to know more on this, again, go to our website, www.citizenshipquickly.com, and just ask for some help. And I look forward to talking to you on the next video. Take care.